The people who actually ran Signature Bank, meanwhile, the so-called bankers, did not seem to spend a lot of time banking. And of course, they didn't need to bank, really, because the Fed was guaranteeing them a never-ending torrent of cash in the form of free money. So what did they do? Well, here is Scott Shea, the chairman of Signature Bank, welcoming his employees to a meeting of the bank's critical Pride Council. This video is from last December, just months before Signature Bank slipped beneath the waves. And the Pride Council in question, as you will see in a moment, featured a self-described genderqueer transmasculine person called Finn Brigham, who arrived to teach employees about pronoun use. Watch.
I'm Scott Shea, chairman of Signature Bank, and it is a pleasure for me to welcome you to this multimedia, multicasted, multispatial meeting of the Pride Council. And I'm just thrilled that there are about 40 people in the room. I understand there are something like 190 people at watch parties. So hi to you all at the watch parties.
You know, the most common pronouns that folks are familiar with are she and he. Becoming much more common, and I don't know if there's anyone in the Signature Bank world, but probably you have clients that use they, them as pronouns. They're gender-neutral pronouns on purpose. We talked about folks that are non-binary, that intentionally don't identify as male or female. So some of those folks use they, them as their pronouns. Z is another gender-neutral pronoun, and the other part of that would be here, spelled H-I-R.
Scott Shea is just thrilled to introduce the genderqueer transmasculine pronoun expert and to host watch parties so everyone else can watch him explain pronouns. What do they pay that guy? What did they pay that guy? How much will they have to pay you to swallow your dignity, to completely eliminate the possibility that your children would ever respect you in order to put on a performance that embarrassing? Probably a lot. We don't know what he was paid. Clearly a lot. Clearly the bank got a lot of money, because trans pronoun experts are not cheap at all. But Signature did have a lot of cash, of course, because the Federal Reserve was printing it. And they got the first pass. This is what low interest rates for 13 years means. So again, this was going on for years. Here, for example, is Signature Bank's music video. Did you know banks made music videos? Of course they did. They didn't know what else to do with the money. This one is from 2011.
Now you've come to Signature. Show your clients what you're worth. Make them go up, up, up. Clients just won't let go. Oh, oh. Now that you're in Signature, come on, let your colors burst. Make them go up, up, up. Your big bank days were long ago.
Sorry, it was a dance party at Signature Bank. Bank. Like there was banking going on. No, it was a dance party at Signature Bank with pronouns. And that's not the only video from Signature Bank like that. You can go online and find many others, including their Broadway-inspired sketches. You could spend all day watching these videos we just did and are better off for it. But it's not just Signature. The guy who ran Signature was really craven and repulsive, but he's not alone. No one at any of these banks seemed to spend a lot of time banking, which the rest of us believed was the core business of a bank, but no. So there was panic, of course, reflected in markets, and it wasn't just regional banks that were affected. For a while this morning, you could not even trade stock in Charles Schwab, venerable Charles Schwab. Schwab went down 25% and tripped a circuit breaker. That's bad. In fact, that kind of panic could quickly, conceivably, become a catastrophe. So on the brink of catastrophe, you need one thing: strong, competent leadership. But we don't have that. We have Joe Biden. Today he shuffled out to the podium and announced a bailout.
I want to briefly speak about what's happening in Silicon Valley Bank and Signature Bank. Today, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills.
All right. So the money the Biden administration is using for this bailout apparently is coming from the FDIC. So the feds have it covered. Don't worry about the details. Everything's totally fine. Hold on. Slow down, pal. How did this happen? Can we get an explanation for that? Don't we have regulators? And how did those regulators, since we're pretty confident they exist, aren't taking big salaries, how did they miss the fact that SVB was insolvent apparently for months, and not in some complex credit default swap way. You're going to spend 5,000 words trying to understand, but in a really simple way that's easy to understand. Their liabilities were bigger than their assets. It's very simple. How did nobody notice that? The people who are paid to notice it. Well, Joe Biden unfortunately answered none of those questions. He just ran for the door.
Thank you. God bless you. And may God protect our troops. See you in California.
Mr. President, what do you know right now about why this happened? And can you assure Americans that there won't be a ripple effect?
Do you expect other banks to fail, Mr. President?
Should all depositors be protected at all banks?
All right, thank you, everybody.
Okay. Do we know why this happened? He's trying to figure out how to work the doorknob. What we know is the Biden administration is backstopping these deposits. Okay. But that's not the end of the story. In some ways, it's the beginning. So here's the part where you pause and ask yourself a question that too few seem to be considering right now. They're doing this. What are they going to get in return? Oh, something, for sure. Remember that after 2008, the Obama administration, Eric Holder, swooped in and imposed DEI, diversity, equity, and inclusion standards on the entire financial sector. And that's one of the main reasons our big banks are now increasingly incompetent, and also one of the reasons Americans are so divided by race. Ideologues used the 2008 bank bailout to kill American meritocracy. That's a big step, mostly unacknowledged, but we're living with its consequences. So you have to ask yourself, what are they going to do this time? Well, we know we're about to see bank consolidation, big banks eating little banks, and that means less competition. More consolidation means more government control. So what are they going to do with that control? Well, all things being equal, if people don't start making a lot of noise and exerting an awful lot of pressure, it'll mean digital currency, a currency that politicians control. Sign up for the CBDC app to get your food stamps. You think that's not coming? Of course it's coming. They'd like it to come in any case. Now, we're not alleging a conspiracy here, but we did notice that the four biggest banks, Wells Fargo, Bank of America, JP Morgan, and Chase, are doing well. And we also noticed that the White House appears to be, maybe we're just reading into this too much, trying to induce runs on regional banks. They seem to be trying to take away your confidence in those banks. Here's Karine Jean-Pierre, the White House press secretary, not someone we'd ever accuse of having an original thought, but she's a vessel for the plans of others. Here she is on Friday as SVB was collapsing. Now, she doesn't say a word about the fundamentals of the market or the security of your money in banks. Instead, she talks about the one thing that matters to her, which is the racial identity of the people in charge of our finance system. Watch.
I do want to take a moment to note the historic nature of the moment that you see in front of you right now. All three of us are historic first in our roles. The first black woman to serve as CEA chair, OMB director, White House press secretary. The first black women right in front of you for all of those three important key roles in the administration.
These people lack all self-awareness, as if anyone would care. Why should we care? Is there some reason to care? And by the way, you are discrediting by your stupidity and clear incompetence anything you're promoting. You should keep that in mind. But big picture, if you wanted to make people less confident in regional banks and the banking system more broadly, if you wanted to maybe induce a run on the banks, this might be how you talk. Oh, we're all of a certain racial group. Huh? What does it have to do with whether the banks have enough cash in reserve to cover their balance sheets? So what we do know is that the Democratic Party, the Biden administration, sees this crisis as a means of expanding their control. And we know this because in a recent Zoom call with the Fed, Treasury Department, and other financial regulators, with members of Congress, Senator Mark Kelly of Arizona asked whether there was a program in place to censor social media posts that could lead to a national run on banks. Now, that's according to Congressman Thomas Massie. Michael Schellenberg has a great piece on this today. Massie was on the call. So think about this for a second. You've got a deposit at a regional bank that's holding tons, way more than you know, of long-term treasuries that are worth a lot less than they were when the bank bought them. That means that bank is at risk. That means your money's at risk. But Senator Mark Kelly of Arizona doesn't want you to know about that. Why wouldn't they want you to know that? Kind of interesting. That kind of censorship could actually crush people.